Welcome to NABTrade's wrap-up of Federal Budget 2019. I'm Gemma Dale, NABTrade's Director of SMSF and Investor Behaviour. This year's budget is unique in its timing and also in the fact that it has been released immediately before the announcement of the next federal election. Voters should be aware that all of the proposals in this budget need to be passed into law before they become effective. And since the Parliament will shortly be dissolved, the current federal government may not be returned to power. There's far less certainty about the likely impact of some of these measures and these proposals than there has been in previous years. The really big news tonight was taxation changes, clearly the centrepiece and very clearly targeting individuals and also eligible small and medium-sized enterprises. Let's have a look at individuals first. The low and middle income tax offset will increase from a maximum $530 to $1,080 per annum. The base rate of this offset will also be increased, and if it's legislated, this will be effective from the current financial year. The amount of offset you're entitled to will vary depending on your income, and it's important to note that it's paid as a lump sum after you submit your tax return, so you won't get any benefit from this until after the 1st of July. It should also be noted that the opposition have actually previously indicated they will support tax measures aimed at mid and lower income earners, so the government would like to get this one through. They may have the support of the opposition, but they've only got a couple of days to do it before Parliament's dissolved. In terms of detail, the low and middle income offset will be available for the 2018-19, 19-20, 2021 and 21-22 income years. Individuals with taxable incomes up to $37,000 will have their tax reduced by up to $255. This will increase incrementally for those earning between $37,000 and $48,000. The maximum offset of $1,080 will be available to taxpayers with taxable incomes between $48,000 and $90,000. And then the offset gradually reduces to zero when you've got a taxable income of over $126,000. There is a calculator available if you'd like to understand what the likely impact is for you. From the 1st of July 2024, it's proposed that the 32.5% tax bracket will be reduced to 30%. Together with the already legislated removal of the 37% tax bracket from the 1st of July 2024, it's estimated this will mean 94% of taxpayers will have a marginal rate of no more than 30% from that year. The existing instant asset write-off regime will be increased and expanded. If passed, this will apply from budget night to the 30th of June 2020. An immediate upfront deduction will be available for eligible businesses for assets costing less than $30,000, up from $20,000 previously, and a proposed threshold of $25,000. Small businesses with an aggregated annual turnover of less than $10 million are already eligible. This measure, if passed, will apply to businesses with an aggregated annual turnover of up to $50 million. And it's worth noting it applies to each asset purchased, not to one single asset per business. Let's talk about superannuation. There have been a couple of proposed amendments to super this year. It's pretty quiet compared to previous years, which I think many investors are actually going to be pretty pleased about. The two significant proposals from this budget relate to the eligibility of those contributing over the age of 65. Currently, you need to meet the work test if you want to contribute to super between the ages of 65 and 75, which means you need to have worked at least 40 hours over a consecutive 30-day period during the financial year. The age at which the work test requirement kicks in is going to be increased to 67, which effectively gives you an extra 2 years to contribute to super even if you're no longer working. These contributions will still be assessed against your current contributions caps, which haven't changed despite a bit of speculation. These caps are $25,000 per annum for pre-tax contributions and $100,000 for after-tax contributions. You can currently bring forward up to 3 years worth of post-tax contributions or $300,000 in a single year if you're less than 65 at the beginning of the financial year. Now, this is going to be available for those aged under 67 with the new measures. The measures, if passed, will apply from 1st of July 2020. The obvious benefit of this one, if it's passed, is it allows people to contribute to super for longer. If you have less than $1.6 million in super, which is important, it could allow you to boost your super, and it's worth remembering super still remains a really attractive environment for tax purposes, with retirees paying no tax on incomes or earnings in the pension phase of their super. Finally, on super, spouse contributions will be able to be made for a spouse aged under 75. Currently, this is only available if the spouse you're contributing for is under age 70. Your spouse does need to meet the work test to receive the contribution if they're over 65 currently or over 67 with the new measures if that does get legislated. But depending on their income, you may also be eligible to receive a tax offset of up to $540. There are quite a few eligibility rules with this one, so make sure you check them. They're on the ATO website if you want to use it. And finally, Social Security. If you were eligible for certain Social Security payments on budget night, you will receive a one-off energy assistance payment. You can spend it on whatever you want. This is a payment of either $75 for a single person or $62.50 each for members of a couple, which will be received by those who were receiving age pension, disability support pension, carer payments, single parenting payments, and certain Departments of Veterans Affairs payments. This measure has the support of the opposition and it is likely to be passed, we hope so, before Parliament is dissolved. It will be paid automatically by the Department of Human Services from June 2019. Well, that's a wrap for this year's federal budget. You'll no doubt receive many reminders in the coming weeks that the federal election is just around the corner. And these measures must be passed either by the existing government or after the election in order for them to take effect and to have any impact on your personal circumstances. Thanks for joining us.